Okay, so today we're gonna talk about everything about trading plan. So we're gonna cover if again, whenever you're on the live sessions like this for the fun of the program, you always want to make sure that you have your notes beside you because you're gonna have to take notes. Okay, so we're gonna go. This is our subtopics. We're gonna go over the need for a trading plan, the least important process in trading, the keys to a successful trading plan, a paradigm shift, modular thinking, pay yourself, and I think that ends everything for today. Oh shit. Okay. Well, actually, if I was talking to you guys, sorry, sorry. Okay, sorry. So, oh god, I'm gonna have to start again. So today, again, when you guys are on calls like this, you always want to make sure that your notes are beside you. So I don't know if you guys have your notes beside you right now. Actually, on this call, you need to have your notes beside you always. Okay, Cage, yes. Pedro, yes. Ramon, okay. So now this is gonna be our topics for today. We're gonna cover topics for today. So the first one is the need for a trading plan. Number two is the least important process in trading. The third is the keys to successful trading plan. The fourth is paradigm shift. The fifth is modular thinking. And lastly, we're going to be talking about paying yourself. Why you need to pay yourself in trading. So those six subtopics are what we're going to be covering on today's call. And so this is going to be essential to your trade management. So what people actually think about trading is that trading is mostly about analysis. Okay, so you've seen days whereby I get my analysis wrong, but I'm still profitable. Okay, so it's all about your trading plan. It's your trading plan that's going to get you to a point whereby you're going to be profitable most of the time. Okay, there's so many days whereby I get my biases wrong. So when I'm getting my biases wrong, does not necessarily mean I'm taking a loss. Okay, getting your analysis wrong does not necessarily equate to taking a loss. Okay, and what's going to actually get you to a point whereby you're going to be more successful than you take losses is going to be your psychology in trading and your trading plan. So your trading plan is actually the most important process to your longevity in this industry. Okay, that is your psychology and your trading plan is the most important to your success and making a career out of this. That is what you need. Okay, excuse me. So now we're going to be talking about the need for a trading plan. So why do you need a trading plan when you're going into trading markets? So you need a trading plan because without a trading plan, you get emotionally driven results. So what is the number one detriment to consistent success in trading? If you've gone through the refinement course, I talked about this. There's one big factor that hinders consistent success in trading. Consistent success and longevity in trading. Fear. Exactly. Fear. So basically, it's fear and greed. So it's gonna be all emotions. Okay, so your emotion is gonna be your biggest enemy when you're trading. And this is the thing about professional traders. Professional traders have trained themselves to a point whereby they disassociate fear from their trades. Let me give you guys an example. So today we took a trade on Aussie, and then we're slightly profitable before price started to go against us. Okay, but it was to be some other people. They'll be like, people are gonna see me take a loss. Let me just hold this trade and hope that price eventually drops down. Okay, so you thinking that way, you shouldn't be even actually be thinking that way because you thinking that way now means you're thinking like the retailing herd, and you're allowing your emotions to make decisions for you. And the thing about emotions is emotion never makes logical decisions. Logic and emotions are two different sides of the brain. They require two different parts of the brain. Okay, so when you're trading, you only want to employ logic when you're trading, and you want to remove all forms, all sorts of emotions from your trading. Okay, so because again, if you're gonna trade with emotions, it's gonna be impulsive. So you're only gonna trade impulsively. You're gonna close your trades impulsively. You're gonna hold losing positions impulsively, and it's not gonna be from your logic or your trading plan. So basically, what the trading plan does for you is a trading plan is gonna eliminate all of this because you know when price does this, this is what I'm gonna do. So before you take a trade, you must have played out every possibility in the marketplace and be ready for those possibilities. So if price does this thing, or price could do this thing, and when price does this thing, this is what I'm going to do, or if price does this thing, this is what I'm going to do. So what you're doing right now is you're thinking in terms of probabilities. Okay, so is price most likely to do this thing, or is price most likely to do this other thing? So what if price does this? What do I do next? Or what if price does this? What do I do next? Okay, those are all the processes that goes into execution. So you need to realize and understand that execution and analysis are two different things. They're two different niches. What I've been training you guys on for like the last 1 year or the last 6 months has been analysis. Okay, many of you guys are good in analyzing price action. What you need now is that modular thinking for consistent results. And that modular thinking is only going to come by the way of thinking strategically when you're taking trades. Okay, and removing and eliminating emotions from your trade. Okay, so when you don't have a trade, because what's going to give you what the thing that will actually get you to that point of strategic thinking is going to be your trading plan. Okay, so if you don't have a trading plan, you're never ever going to get to that point whereby you think the way I do, or you think the way the professional traders do, whereby they're playing out all the possibilities before they take on a trade, and they're reacting efficiently to whatsoever the market is throwing at them. Okay, and this is where you want to train yourself to get to. Let me give you guys okay, yeah, cool. So now the thing about trading plan is they help you manage your time wisely or efficiently in price action trading. So I see a lot of what you guys on the chat box. 24 hours every single day, you guys are all talking about price action and charts. I'm looking to take this trade. And yeah, granted, of course, I used to do that a couple years back when I actually got into trading. Every single second, every single minute of the day, I'm always looking at price action, looking for a trade to take. And the thing is, this is not simply sustainable for results when you're trading. If you're looking at price action after London close, there's something seriously wrong with you. That means you're still retail, you don't know how to trade, you don't know how to analyze price action, you don't know when to stay away from the market, when to look at the market. Okay, and basically you're gonna be a huge failure when it comes to trading. And this is what most retail traders go through. Retail traders are gonna spend the most amount of hours on the charts, yet they get the worst possible results. While the professional traders like myself and other people, we spend the least amount of time on our charts, yet we get the most results. I only spent about 30 minutes on the charts today, and I took a profit on GU, took a loss on a 9 very, very small loss. That was about 0.5% loss on Aussie. And I was wildly profitable for today because I made about 6% return on GU, risked only 1%, made a 0.5% loss on Aussie. Okay, and I only spent about 30 minutes throughout the entire day looking at the charts. Maybe I was done. I went to the gym in the morning, came back from the gym, had my bath, looked at the charts, went to bed, woke up. I'm also in school for you guys. Once I'm done, I'm going back to bed because I'm really, really tired. Okay, so that is the way your training should be. You should know when you're ready to take on a trade. You should know when you're supposed to stay away from the marketplace. Okay, this is the thing about professional traders. And the only thing that will get you to that point, the only thing that got me to that point was my training plan. Having a training plan and refining that training plan. Of course, it's going to take weeks for you to refine that training plan. But once you do, things are going to become a whole lot more easier. You're going to be making thousands of dollars, spending the least amount of time possible because now you've put in the work and you've refined your trading to a point whereby you know when you're meant to take a trade, You know when you're meant to stay away from the marketplace. And that is how trading should be for you. That is how you want to make trading be for you. Easy. You don't want to stress yourself when you're taking trades. You want to make everything easy for yourself. So now we're going to get into the next segment, which is the least important process in trading. As I said, this is where you actually bring out your notepads, because these are all bullet points that I'm going to go through. So you're going to have to write all of this down. So these are all bullet points. You write them down on your notepad, and once you're done with the call, you can then go revisit them. Okay, so number one, the least important process in trading, number one, is do not focus on the money or the amount of money you hope to make. This is a huge mistake on the part of retail. People take on trades, and what you're saying is, I want to make $500 on this trade. I'm looking to make, if this trade gets to TP, I make $1,000. If this trade gets to TP or TP1, I want to make $2,000. Can someone in the chat box tell me why this is a wrong way of thinking? What is the detriment to thinking like this when you're trading? Let me see if you guys are actually up to speed with what I'm teaching you guys. Exactly. So once you begin to focus on the amount of money you're going to make from a trade, and you begin to focus on the outcome, that is going to get you all emotional. So even if you're making $250, because already in your mind you said, I'm going to make $500 from this trade, you're going to hold, and you wouldn't want to take partial profits. That is really, really detrimental to your success in trading. Again, what you want to do is you want to eliminate all forms of emotional thinking. So by focusing on the amount of money you want to make, that adds emotion to it. That was why on the refinement course I said, focus on your losses, focus on your stop loss, focus on your risk. By the time you shift your focus away from the rewards to the risk, even though this seems counterproductive, okay, that is actually going to help you. Let me give you guys an example, okay? So there's Gabriel, which is one of our educators on, Gabriel's one of the educators on our team, okay? And so basically made about, I think 50% on his account this week. He's being consistently profitable, just realizing these simple concepts. So what I told him to do is, okay, so your analysis is all good and all of that, but where you need to step up on is your psychology and your trade management. And what he simply did was he began to focus on the losses and was risking the least amount possible, which is 1 to 2% per trade. 1-2% per trade, 1-2% per trade, and it was focused on the losses. And what he actually found out was that it became easier for him to focus on the losses, because now it was never ever attached to the result of a trade. So even if a trade is profitable, even if a trade goes to a loss, you should never be attached to the result of that trade. Because by being attached to the results of your trade, that leads to you over leveraging on the next trade. Or that leads to you being not confident on your next trade because you took a loss. Are you guys think I'm not going to be confident tomorrow if I want to take on a trade because I took a loss on Aussie today? Of course not, because I don't associate my result with the result of the previous day, as you should all do too. Okay, number two, do not worry about the losses. Losses are good for you. Losses are beneficial to you. Losses are necessary if you want to become consistently profitable. Embrace the losses, accept the losses as a part of your journey towards becoming consistently profitable. Number three, do not worry about missed trades. Don't worry about missed trade opportunities. There's always going to be the next trade. The forex market is not going anywhere. As long as you're good, there's always going to be the next trade set up. So even if you miss out on the move, okay, it's all good, it's all cool. The next time you can catch that move. You can learn from that move. You can learn why you missed that move. Alright, so number four, the least important process in trading is the entry signals. Okay, taking an actual entry in price is the least important part of the process. The most important part is understanding the market environment. Understanding, are we in a ranging market environment, or are we in a trend market environment, a reversal phase, or a breakout, or what is our higher time frame direction? Where's our higher time frame targets? Where is price coming from? Where is price going to? Where are the institutional order flow? So you need to understand both the macro perspective and the micro perspective before you think about the entry signals. Again, if you go through the refinement, I showed you that just mainly three entry signals I take in my trade, and that's all you're gonna need as long as you understand the macro perspective in price. Okay, so GU trade setup I took today was simply order block, sell entry. That was all. Gold setup I took this morning. I actually even forgot about gold. Yes, I took gold shorts this morning. Gold shorts this morning was a breaker setup. So down candle price, the up move on the liquidity, retracing back, sold short, and boom, it went down. Okay, so what I'm trying to point out is the entry signals is the least important part of the process. Okay, what is more important is your general understanding of price. Do you understand what price wants to do? You know, understand where price is going to, where price is reaching for. That is the more important part of your analysis. Number five, keep the focus on your trading plan and work the trading plan edge. Work the trading edge your trading plan exploits. Okay, so your trading plan is always going to have an edge. For me, my edge in trading plan is New York session trades. I found out New York session trades, I'm usually about 95% profitable in New York session trades. And in London session, I'm usually about 75 to 80% profitable in London session. Which is why most times I just trade New York. Unless if I find a very clear-cut opportunity during London. Okay? Which is why you see all these insane results because I'm trading New York most times. So everyone's gonna have personalized trading plan. Your trading plan could be you only day trade. Okay, you're looking at the last 3 days worth of movement to determine your trend, and that is what you stick with. Your trading plan could be you trade only a power of 3 setup. Your trading plan could be you trade only order blocks. Your trading plan could be you trade only mitigation blocks or breakers. Okay? A trade plan could be you trade only sell moves, bearish moves in the marketplace. So what I'm trying to point out is from all the concepts we're teaching you about institutional, you don't need to understand everything to be successful. As long as you can understand the general market tone and you can select the strategy that actually works for you, that is all you need to create consistent success in this business. And that is where your trading plan comes along. This is why your trading plan is actually essential. If you want to properly manage funds, that is what is essential to your success. All right, so let's see the chat box real quick. All right, so now we're going to go into the next section, which is the keys to successful trading plans. All right, so what are the keys to a successful trading plan? Impeccable risk control is the first component to any successful trading plan. This is why you need to always focus on your losses, focus on your risk or your risks. Okay. This is why initially when I used to trade before, I was always risking about 10-20% without even understanding. In the past, when I actually started out trading, I used to risk about 50%, 40%, 60% of my account. That was why I was blowing accounts so many times. Now I've gotten to a point whereby I trade, I think last week I took a $50 account to a $500 result, just because I wanted to see how much I could grow an account. And so basically what I did was, I was like, all right, so now here's $50. So I went through my journal and I discovered that my success rate was actually 7%. So just utilizing that, I was like, okay, so if my success rate is 87%, that means I'm going to win 8.7 trades out of every 10 trades. So that means I could risk about 35% of my account per trade setup, because I know out of every 3 trades, I'm going to win at least 2 trades from my results. And that was simply what I did. So I was able to risk 35% on that $50 until it went to $500 because I already knew my results just by journaling my outcomes, my trading outcomes. So you can't be able to critically analyze yourself and analyze your progress if you're not journaling your trades. I'm going to ask this question. How many of you guys actually journal your trades? Because if you've gone through the refinement and you're not joining your trades, I'm hugely disappointed in you. I mean, I'm hugely disappointed in you because I emphasize that if you want to become consistently profitable, you're gonna have to journal your trades. It might seem stressful, but that is what you need to do. So I'm gonna be guys in this call, do journal your trades. Yeah, so I also utilize the Telegram. I utilize the Telegram to send my trade ideas too. So I do it before and after. Just lots of ways you can journal trades. You can order. I think QBank, the Wall Street Academy has this trading journal that you can simply order and just fill out your trading ideas. So what I do is on paper I write down reasons why I'm taking trades and entry levels and all of that stuff. And then on Telegram I send my before I took that trade and then the after I took that trade. So the paper is where I make annotations and all of that stuff. Oh, okay, yeah, that's cool. So yeah, if you can do that, I think if you actually you can do that on TradingView. Yeah, so if you can do that on TradingView, that actually makes sense. Yeah, of course. Yeah, the call is recorded. So the call is recorded, kid. So finding string. Can you? I don't know who finding string is. So can you make a video explaining how you do this so we can actually? Oh, Bella. I thought Bella was Bills FX. Shit, man, Bella. Okay, so Bella, can you make that video explaining how you do this with trading views? That's actually going to be beneficial to us. Okay, thank you. Thanks so much, bro. All right, so cool. So now the key to your successful trading plan is by shifting your perspective on the risk, shifting your perspective on the losses, shifting your perspective on how much you're risking per trade. Okay, so impeccable risk control is the first component to any successful trading plan. Number two is a flawless equity management. So, the flawless equity management is your position trade management. So that means what is your risks to reward? So if you're averaging 50% wins on your trades, okay, your risk to reward should be at least a 1 to 2 setup. Okay, so that means for every one trade you're losing, if you win the next trade, you make 2 times what you lost in the last trade. If your win ratio is actually 50%, if your win ratio is more like 70% or 60%, if you have a 1 to 1 risk to reward, that is okay. You're still gonna be profitable in the long run. Okay, so when you're looking at flawless equity management, that you need to focus on risk to reward. So what I do most times is my first TP is usually 3 to 1, at least a 2 to 1. So I usually take profits only when my the first level is at least a 2 to 1 setup. So that way I know even if I'm taking a loss, there's no way in God's earth I'm gonna ever lose 10% of my account or lose 8% of my account if I trade that way. So what that essentially does for you is that it puts you in a position whereby you can never lose because you understand all of these things. Okay, number three, the fundamentals should be included in your analysis protocols. Okay, so remember we went through the rundown for analysis protocols, what you need to do before you take on a trade. So you also need to include your fundamentals into your analysis protocol. So that means looking at the COT, looking at open interest, looking at interest rates, and all of that stuff. That needs to be included in your analysis. Number four, intermarket analysis is key to a well-balanced trading plan. Okay, so understanding the different asset classes, understanding correlation between DXY with your foreign currencies, DXY, the stock market indices, and all of that stuff is gonna be essential to you being profitable. So basically what I did today was looking at euro pound and looking at euro dollar and pound dollar. That was basically how I was able to forecast that euro pound dollar was going to be more bearish, and that was why I took the sell on pound dollar, and you actually saw the results. Okay, so that was basically just by using a simple intermarket analysis to take on that trade. Number five, technical analysis and a comprehensive approach to sound tools and concepts is the framework to exercising a training plan. All right, so now we're going to talk about paradigm shift, which is the fourth in our segment today. So number one, all well-designed trading plan will have a losing streak. You're gonna lose. You're gonna have five losing trades in a row. You're gonna have six losing trades in a row. You're gonna have four losing trades in a row. You need to understand that this is gonna happen. There's nothing you can do to stop it. It's going to happen eventually. I need to learn how to be comfortable with that. Okay? So you need to understand that you're gonna have losing streaks. You're also gonna have winning streaks. You're gonna have winning streaks. You're gonna have losing streaks. It's gonna come. It's gonna go. Okay, but the essential thing is you learn from it. And as you learn from it, your losing streaks are gonna reduce from like 6 losing trades to about 3 to 2 losing trades. Okay, losing streak for me actually right now is when I lose three trades in a row. That is a losing streak for me. Initially in the past it was like more like 6, 7. And again, this is why your trading plan is essential. Because by understanding your trading plan and journaling your trades, you're gonna understand where you're getting things wrong at, why you're losing trades. Okay, so be prepared in advance for days of losing streaks. Always be mentally ready that you can lose on any trade. And this is why I advise you guys that whenever you take on a trade, anticipate a loss on that trade. Be ready to take a loss on that trade. Only that way you can survive the losing streaks, because you are expecting a loss, and if you actually see that loss come to fruition, you don't feel anything. But if your price then goes to the take profit, then you feel that feel of elation because you were wrong and you gave the money. Okay, so number three, reflect on your wins as a victory and your losses as an opportunity to grow. Again, as a developing trader, your losses are essential to your success. This is why most times I don't advise trading signals. So trading signals is only for those who want to build equity or are looking to pay their subscription, all of that stuff. But it's healthy for you to take a loss whilst you're developing. It's healthy because you need to take that loss to grow from it. Just the same way you need to go to the gym and feel the pain to grow your muscles, this is also the same way you need to feel that burn on your account to grow your understanding of price action. Okay, in my history, I've taken a lot of losses. This is why you're seeing the results you're seeing right now. Because when I took losses, I was always mad why I took that loss, and I had to go and study why I took a loss, so I don't take that loss again in the future. And this is why you've seen my trading drastically improve. Okay, so number four, every great trader has a respect and understanding that the risk will always outweigh the reward unless it is properly managed. Again, it's the same rhetoric I've been saying for a while now. Focus on your risk, focus on your risk, focus on your risks. Okay? So number five actually, it's modular thinking. So let me draw something real quick for you guys. So let me get down to this. Okay. Okay, so small, consistent results the B result. Right, so we're gonna do this. All right, so can you guys read or type out what I read on my screen from this to this? Type it on the chat box. What did I read on my screen? Small, consistent results creates the big results. The $50 you're making every single day eventually is going to compound to a $1 million account. The $100 you're making every single week eventually is going to compound to a $50,000 account. It's going to compound to a $5,000 trading week. It's going to eventually compound to a $10,000 trading week. It's going to compound to a $100,000 trading week. But the bridge between this and this is one word. Okay? And you guys are not gonna want to hear this, but again, I don't care. Okay? It's one word. Patience. If you're not patient enough to see those small, consistent results, that big results, you're gonna be struggling for a long while because you're gonna have to over leverage to want to get these big results, and you're gonna end up blowing your account. Let me give you guys a quick breakdown. So if you actually go through QBanks, how many of you guys know QBanks? One of the more popular traders on Forex. I'm sure we all know QBanks. The same way we all know Sean Lee. Correct? Only Francis knows about QBanks? That's right. Okay, so only 2 people know about QBanks. Alright, so everyone knows about QBanks. Okay, Ramal says he heard about them. So now, if you look at QBanks, if you just go through his Instagram, okay? And I did this so all these famous traders I actually thought were legit. Because if you go through QBank's Instagram, go all the way down to 2015 posts, 2016 posts, 2017 posts. He was making $300 per trade, and I was pretty much excited then. I was making $300 per trade. I was making $300, I was making $500 on USDJPY trades, but it was pretty consistent with those results. Okay, it was very, very consistently making $300, $400, $500. I think the first time I made a $2,000 trading result, it was so elated, and I can't actually remember. That was like 2016, 2017 ish. Now, fast forward 3 years later, and he made $450,000 on one trade on US30. So now, I want to ask you guys this question. Did he over leverage to get to that $450,000? Or was it all the small consistent results of the past that compounded to create that, to put him into a position whereby he can make $450,000 on one trade? That's $500,000 on a trade. Okay? Exactly. So this is why, and basically it took him 3 years for him to get to that point. 3 years of doing the same thing consistently, only increasing his leverage as his account grew. So this is what you need to understand about trading. The small consistent results plus patience equals the big results. Okay? So those small wins you're taking, keep making those small wins. Eventually, it's gonna lead up to a big win. It's gonna lead up to a 3,000 week. I came Mufasa had the $3,000 week, his first $3,000 week. That was 2 weeks back, and that was after months of being on our team and grinding before Mufasa was able to make a $3,000 week. Eventually, you're gonna see Mufasa makes a $5,000 week. Okay, because that's the only thing you can do. As you begin to go through the journey and the process, you're gonna begin to improve, and then your leverage increases. Eventually, Mufasa is gonna make a $5,000 week. Eventually, he's gonna get to a $10,000 week. Eventually, he's gonna make a $20,000 week. Okay, but what you need to understand is he's doing the same thing consistently over and over and over and over and over and over and over again. And as his account is compounding, he's increasing his leverage, but he's only doing the same thing he's been doing ever since. Okay, QBanks has been doing the same thing he's been doing ever since. The only thing that benefited him was that his leverage increased multiple folds. So the small consistent results is going to give you the big result. But what comes in between is the patience to let those small consistent wins gets the big result. So whenever you're taking on a trade, you need to have a weekly goal, a monthly goal actually. Okay, so your monthly goal could be you want to grow your account by 30% in a month, or 40% in a month, or 20% in a month. So typically, I would recommend 20 to 30% for you guys on this call. For some of you guys who are still new to trading, again, I did not want to open up this mentorship to just anyone. So for those of you guys who are still not really, you're not really proficient yet in your analysis of price action, you want to look at or focus on 10% a month. Okay, so you want to focus on 10% a month return, and then as you begin to eat 10% a month, you can then increase to 20% a month. Okay, but it's important to understand that you need to have a goal. You need to have a goal. Okay, you need to have a goal. It could be 20%. Okay, start with something small. Again, the small consistent results are going to give you the big results. Start with something small. Be consistent in that thing. Then you increase. There's something we call progressive overload in the gym. Okay, so for those of you guys who go to the gym, you're going to hear this term progressive overload. So progressive overload simply is if you're benching, let's say 196 pounds, okay, you want to get very good at your form, benching 196 pounds over the next couple months. Okay, and as you get better and you're repping 10 reps for 196 pounds, okay, now what you're gonna do is you're gonna increase the weight. You're gonna go 205 pounds or 210 pounds. Okay, and you're gonna try for, let's say, 5 reps. So you get doing 205 pounds for 5 reps. Okay, then you increase 205 pounds for 8 reps. Then you go higher. Now you can go 225 pounds. Okay, so you can do 225 pounds for 3 reps. Do that consistently. Once you've perfected your form, doing 3 reps for 225 pounds, you can then up it to 6 reps, then to 10 reps, then you go higher. Now you can do 300 pounds. Okay, so that's what we call progressive overload. This is also the same thing you need to apply to your trading. So what you want to do is you want to start small, become consistent in your small results, and then you begin to increase and you begin to grow. So that means you could start with, you want to make 15% a month. Okay, and after 3 months of making 15%, you can go with 20% a month. And if you get consistently making 20% a month for 3 months, you can then up it to 25% a month. Or you can even go for like 35% a month. And then that is where you begin to get astronomical results. With a 10% increase every single month with a $5,000 account, okay, in 2 years your account is going to be at $1.8 million if you don't withdraw anything from it. Because you guys think the small results do not necessarily compound to anything. But if you're consistently making 10% a month with a $5,000 starting account, in 2 years you're going to be at $1.8 million. Tell me what investment is going to give you $1.8 million from a $5,000 investment in 2 years? Nothing. Even if you threw that into Tesla, you threw that into Bitcoin, that is never going to give you that same result. Now, imagine you're doing 20% on that $5,000 account, or you're doing 30% of that $5,000 account. Now you're getting to $3 million in 3 years. But now, why can't most people actually do this? Because there's no patience. Okay, the patience actually is missing. Okay, so this is why you barely see people do this, because there's no patience for them to get to that level where they can trade $1 million accounts. Okay, so you need to have a monthly goal for equity growth, preferably 10-20% for newbies, and then divide those monthly goals into weekly goals. So now let's say, for example, your monthly goal is 10%. What you're going to do is, so if there's 4 weeks in a month, okay, I could do, let's say, I could do 3% a week. Okay, you can do 3% a week, and you don't necessarily, even if there's going to be some weeks whereby price action is just off and you're going to get real good results. I need to be comfortable with that as long as you're on track to get towards your monthly goal. So there's going to be weeks whereby you get off track or you take a losing week. Okay, as long as you're always on track to get towards your monthly goal, That is all you require. Again, the small consistent results gives you the big results. So what you need to focus on is the consistency. Okay, focus on the consistency. So even though your goals might fall short of your forecast, nevertheless, don't be discouraged because you're still on the right path. And then lastly, we're going to talk about paying yourself. So paying yourself means you want to methodically take first profits. Taking first profits removes the excitement to want to collapse the entire trade, because there's going to be sometimes where after executing a trade and you're managing that trade, you're beginning to get excited when you see huge moves in price action. Once you begin to feel that emotion, that is when you need to take first profits. By taking first profits, that removes considerably emotions from you managing that trade. Okay, so that basically brings us to the conclusion for today's session on trade management. So hopefully this session was insightful to you guys. I'll send the recorded video I'll upload that to the Google Link drive, and I'll see you guys tomorrow. So make sure y'all stay safe. I'm gonna end the recording